All right, let's now take a look at the bigger picture with Shay Boloor, Chief Market Strategist, Futurum. All right, Shay, it is good to have you back. I loved our last chat. Let's start out with a big picture take here. You had President Trump posting, and I know you've been busy on social media, but President Trump posted on Truth Social about this phone call with China's President Xi Jinping. He said it was good, essentially said it was positive. He said it was an hour and a half long conversation. You initially had stocks turn a little higher, this grind higher. Now we seem to kind of be flatlining from here. What's your take on this?
I mean, we loved seeing the East versus West finally hash the conflict they've been experiencing for months now. But I think that's taking what's happening between Elon and Trump is taking much more precedent on the mind share of this administration of how chaotic it is, where you think of one way, type of A, and type B just a couple weeks later, it's completely something different. So even though Z and Trump had a very great dialogue this morning, who knows what tomorrow's appetite's going to be or next week? Like it's agent of chaos, this environment, and the market's craving clarity. And unfortunately, I don't think we're going to get that anytime soon. And I wouldn't be surprised if this tariff war we're experiencing was going to go through summer and set up a very difficult Q3 of this year.
Okay, I want to get to another topic that I know is on your mind. It's the battle between the first friends, between Elon Musk and President Trump. But before we get to that, I'm curious to know, since it seems like this latest tariff talk hasn't given a lot of clarity to the market, what do you think is in driving investor concerns, investor interest through the balance of this week?
I mean, let's just cut through the noise. The ADP number wasn't just weak; it was a warning shot. At Futurum Equities, we are a little concerned about the near-term reality of only adding 37,000 private payrolls in May, the lowest it's been in over 2 years. That's not recessionary yet, but it is close. It's too close for comfort. The narrative of resilience is somewhat cracking, and under the surface, the data is whispering that what no policymaker wants to say out loud, and what we're seeing in the Futurum Equities is that the labor market might be breaking before inflation really cools off. And in a market priced for perfection, like we are right now, we're just inches away from all-time highs. This feels like a dangerous setup where the Fed's still holding interest rates really high, tariffs are back on the table, and there's no fiscal impulse coming from Washington. And yet the market keeps grinding higher, and that's because what we believe that's happening today in this market is a pain trade. Not much a conviction trade. It's a byproduct of too much positioning on the sidelines, too much liquidity looking for a story. It's short covering, and that is a dangerous setup.
Okay, that's a dangerous setup. I'm curious to know your thoughts on this setup. I know you were talking on Twitter X about some names to watch for potential entry into the S&P 500. You mentioned Robinhood, you mentioned the Trade Desk, AppLovin, Carvana, Datadog. What is it about you? What do you see about these being poised to be considered to enter the S&P 500?
I mean, I think Robinhood is probably a textbook case study in business school in the future of how you can change a narrative from what people thought of the GameStop fiasco. They're just a brokerage in a fintech space that's highly competitive with no moat, into transforming into this media company now that has a fintech arm, not just a bank, not just a broker, but something much greater. They're owning eyeballs, and they're not just weaponizing volatility, which a lot of people assume that they are on their spreads and what the GameStop fiasco, but they have their finger on the pulse of what's coming next. And Vlad deserves a standing applause for how he has changed that narrative around his stock, and the TAM is expanding quarter after quarter from latest and greatest. Like even just 3 months ago, predictive markets is starting to go into their ecosystem. Now they're starting to eat DraftKings lunch with that new product. And before that, they're getting into credit cards and 401k attributions coming into their ecosystem. And just this morning, they announced $250 billion of assets into their ecosystem. This is execution showing in clear black and white that Robinhood is going to be much bigger than a lot of people anticipate. And I'm very excited to see what their next chapter is. And I think they have the right captain to that ship to see what's coming next.
Well, there have been some people who have been critical about how Robinhood handles some things. But I want to put a bookmark in that and talk about some momentum that we are seeing in MongoDB. Does it make sense to you what do you think is behind this momentum? I mean, shares up more than 12% right now.
Yeah, I mean, we at Futurum Equities believe that this is the beginning of a massive re-rate on MongoDB, because as the model in agentic AI shifts from passive response to real-time reasoning, which what we're seeing in the back end with the leaders that we talked to in the fourth industrial revolution, databases must evolve too. And that evolution showed up in this earnings yesterday, where Atlas, their AI product, didn't just re-accelerate. It was the first time it did in 4 years. Developer adoption surged, and the architecture is now aging into the agentic AI era, where Atlas grew 26% year over year. That's now making up 3/4 of their total revenue. And it saw, again, the highest customer additions in 6 years. Free cash flow doubled, margins expanded, and even heard Dev, their CEO, on the conference call out that we believe that Atlas growth has bottomed out and we're at the beginning of the next phase of our growth. And the runway is huge. So I do believe that agentic systems don't just need the data, they need an evolving memory. And we saw NVIDIA last week on how much their networking revenue beat. That was the hidden gem of their print. And we're going to see this afternoon in Broadcom that inference demand is a hot place to be in. I do believe that MongoDB is really setting themselves up for a pretty drastic re-rating in the next 6 to 12 months.
Okay, and I want to get your take on this. I want to circle back to what I mentioned earlier, and by circle back, I'm not talking about the Circle IPO. I probably should put a drum roll there. But let me ask you about your take on this first friends fight between Elon Musk and President Trump, both sounding out. Elon Musk saying Trump would have lost the election without him. President Trump saying, that they had a great relationship, but it sounds very past tense. Shares of Tesla under some pressure right now, down 9% at the moment. What's your take on this?
As a Tesla shareholder, I absolutely do not love what's coming to light today. I do believe that Elon sacrificed a lot politically to help Trump win the presidency, and now there is some bickering that's happening due to the beautiful bill, and it's becoming very public. And I do believe that even the Tesla being down 8 to 10% today, it's due to the market having a short memory. Yes, it's a little troubling in the near term, but the long-term reality is that Tesla is building the neural network for physical AI, and that TAM is drastically higher than what even the most bullish analysts out there are saying it is. And that is going to become more of a reality in the long term. But near term, maybe there's some heartburn due to this conflict of regulation won't be as streamlined as a lot of people anticipated in the Trump-led presidency. But please do not confuse the long-term reality that humanoid robots are here to stay, and it's just getting started. And the FSD experiment in Austin is just around the corner. It's next week. So I do believe there's a lot of early sector growth themes that Tesla is capitalizing on, and you can sense that Elon's back in his wartime CEO era. And I would not count against Elon because he is shooting 100% at anything he's done. And I do believe he's going to solve the physical AI component of the next new digital economy, and Tesla will be the frontier of that.
Okay, I do agree with you that I do think he is certainly back firmly wearing his CEO hat. But I don't know. I have questions about the humanoid robot because it's based on his calculations. It's like his view is that everybody's going to have one, but not everybody's going to be able to afford one. Shay, I know you'll have a response to that. We'll have to take it up on social media over on Twitter X. Shay Boloor, thank you. That's Shay Boloor, Chief Market Strategist, Futurum Equities Research. Appreciate it.